Welcome everyone to this very interesting webinar on reimagining the banking experience with AI. My name is Nikhil Gokhale. I am the head of research at IBS Intelligence. On the panel today, we have Swati Doublish, Director Banking Services at Hexaware Technologies. Hexaware, as many of you would know, is a leading IT and business transformation service provider. It has the three strategies at its heart: automate everything, cloudify everything, and transform customer experiences. Swati has been a banker in her previous life, having worked in areas of consumer banking, wealth management, trade finance, and credit rating. And upon making the crossover to software, even now she is the one who helps, evaluate all the solutions, all the technology solutions through the business lens. And she makes sure that all the changing trends are incorporated in the tech solutions. She currently heads the domain consulting and solutions within strategic innovation and transformation arm of Hexaware's banking vertical. Welcome, Swati.
Thank you, Nikhil. Nice to be here.
Next, we have Conrad Ford, Chief Product Officer at Alika Bank. He is a with really technology at its heart. Alika Bank is bringing a new perspective to SME banking. In fact, Alika Bank was named by Times paper as one of UK's top 20 fintechs. Previously, Conrad founded the leading fintech called Funding Options, which again was named by Financial Times in their list of Europe's fastest growing firms. He has advised multiple fintechs, including Starling Bank, Coconut, and Trade Ledger, some of the well-known brands. So welcome, Conrad. Welcome to the webinar.
Hello, everyone.
And last but not the least, we have Brian Carroll, who is the CEO and founder of Tnex, which is Vietnam's first digital-only bank. Brian, he started his career in digital financial services in 1994. And over the years, he has been recognized as the SME when it comes to digital-only banking, data science, and enterprise architecture. He has a passion for financial inclusion, and he's using the technology to better meet the needs of underserved individuals as well as small businesses. He has again worked with many of the startup communities across the globe, and Brian was named in the top 30 leaders in global fintech by Fintech Magazine. Welcome, Brian.
Very good.
And today we are going to pick their brain on something very interesting. Look, whenever we think of AI, the first thing probably that comes to mind is the chatbots, or what you see, the digital assistants that are displayed very prominently on most bank websites, right? Uh, but there are other applications that have a larger impact on customer experience when it comes to AI. In fact, we work very closely with Hexaware to develop a report which covers 5 such use cases. And you can actually find the report on Hexaware's website if you navigate to the banking vertical. And my hope is that by the end of this webinar, you will know how banks can harness the power of AI to deliver much superior customer and employee experience, and also have efficiencies that previously they were thought impossible, right? And you'll also know the challenges, the benefits, and the critical success factors that banks will probably encounter as they go along this path. So with that, it's time for the first polling question. Let me start off the poll. All right. So the question is, in which segment of the banking value chain does AI have maximum potential? Is it front office, things like chatbots, cross-selling, customer onboarding, etc.? Mid office, That's risk assessment, fraud detection, and the likes. Back office, that includes cybersecurity, intelligent operations, uninterrupted system availability, and all of those. Or do you think it is, all of it, everything just has too much potential? We will give 10 more seconds. I can see that, the numbers are shifting from, earlier mid office and back office, and numbers are shifting from mid office to the overarching one. So it's getting bigger and bigger there. Last 10 seconds. Wow, clearly this is a, overwhelming. So I'm going to share the results. As you can see, overwhelming number of people have chosen everything, right? Which means that, we have a lot of potential at our hands. So why don't I start off with Swati? Swati, we, we're going to talk a little bit about, what Hexaware's solutions are on the AI in the banking side. So I'm going to turn it over to you. I'm going to start sharing the presentation. Let me know when you can see it and you can get started.
Thank you, Nikhil. And a very good morning, good afternoon, and good evening to everybody who's listening in. Thanks for being here. And we hope that there are some key takeaways for all of you from this discussion. I'm seeing the thank you slide, Nikhil. So maybe if you could move to the first one, please. Thank you. Thank you. Yes. And thank you so much. Yes. So the debate about reimagining the banking experience, which is the topic of the webinar as well with AI, I feel is long over. I mean, the verdict is out. AI suits banking with its large number of processes, its large number of customer interactions, and large volumes of data. The dilemma for banks now is how much is too much, or for that matter, how little is too little. The questions that banks are asking themselves today are, how do I translate my AI strategy into day-to-day AI-led experiences for my customers and employees? Should I keep AI for recommendation alone, or increasingly look at it for decisioning as well? What areas of my bank would yield the maximum return on the AI investment? I think those are the kind of questions that bankers are grappling with today as they are crafting their strategy or as they are executing their strategy for AI. And Nikhil, I do hope that some of this resonates with the audience and the panel members as well. We could move to the next slide, Nikhil, with this. While early adoption of AI has been for bottom line savings towards automation of manual repeatable tasks, right? Supervised intelligence for regulatory compliance has also been gaining traction for applied AI. But to really make AI pass the litmus test across the enterprise, banks are now exploring higher order areas and experimenting with, let's say, unsupervised learning with a focus on top line growth. So the three key performance indicators, if I can call them that we are looking at for an AI adoption would probably be operational efficiency, regulatory compliance, and revenue growth in no particular order, because each bank has its own mandates and has its own vision for what they want to achieve from AI. But one thing that probably strikes out is that the right coverage across these three key performance indicators will provide the banks with a roadmap to successfully execute their AI strategy, right? Because that's what we're talking about, strategy to execution. How do I plan that journey, or how do I take on that journey, right? Banks today have an opportunity to enhance their competitive edge while retaining their core values. They can deliver best solutions and services simply by embracing AI. Moving on, Nikhil. Through this slide, let me introduce you to Harvis. Yes, if you haven't already guessed it, it is the cousin of Jarvis from Iron Man. Harvis is Hexaware's virtual lab on Microsoft Azure, which provides a meeting ground for business, technology, and operations to innovate. Hexaware Banking has incubated several end-to-end solution prototypes across banking, powered by the synergy of AI and ML towards the art of the possible. We believe in the philosophy of think first, machine next, and for the technologist in the audience, shift left, of course, which brings us to a greater business context into technology, right? Rendering the proof of concepts that we build in our lab closer to reality, with the potential to scale better and faster. And isn't that really the problem statement today? We are seeing so many proofs of concepts around AI and ML, but have we been able to implement it so that they can really touch our customers and employees in real time in reality, right? So as long as we can bring the business context to technology, that is what this lab does. This lab is not dedicated to technology alone. It is dedicated to business, technology, and operations as a whole. The three use cases in focus today that we're going to talk about today obviously showcase the three KPIs that we spoke about a little while earlier. I'll start with the first one, and in the first example, we are able to drive operational efficiency in middle office with underwriting automation for mortgage. What we did here as part of the overall underwriting workflow is that we leveraged AI and ML to automate analysis of documents submitted during the mortgage application. So whether it is your credit report, whether it is your financial statements, whether it is your home appraisal report, the entire due diligence process that goes on in analyzing the documents was automated through this. We also automated risk flagging of customers. So there you are continuously assessing the risk the customer has to the bank, right? And you are appropriately flagging it, through your AI, which is learning, AI and ML, which is learning as the model matures. This particular use case also triggered auto alerts to loan officers. So clearly we can see three punctuations within the entire workflow where AI ML brought in automation and increased the operational efficiency overall for that particular process, and similar such in different middle office processes as well. The second case that we want to talk about today is related to regulatory compliance. Now, banks can automate transaction monitoring for suspicious activity reporting by bringing in real-time pattern and anomaly detection, right? We generally talk about SAR is post facto. In a lot of regions, it's monthly, quarterly, half yearly, and banks are been reporting suspicious activity post facto. So what this model does here, or what the solution does here, is that it takes the post facto regulatory compliance into the realm of real-time action. So we all have heard about fraud detection and prevention in the real time. This is an extended solution in the same space to talk about suspicious activity in real time, and then obviously to be able to combat it with checks and balances in place. Here I would like to move to the next slide and take you to the third use case a little more in detail, and this is where I was talking about revenue growth. And we'll talk about our award-winning Emergent P3 solution, the winner of the global Incubathon conducted by Microsoft. Is a case in point that banks can leverage AI for revenue growth. The model captures life moments that matter to a customer by aggregating customer data across 5 dimensions. And these 5 dimensions are financial data, which is available within the bank, social data through his social media handles, wellness data through probably Fitbit data, one of the examples, consumption data capturing merchant website data on where the customer is shopping, or credit card data, and his aspirational data, again, based on the posts he's making, based on the lifestyle he's leading, etc. On top of this, we create a real-time pattern repository of data, superposition it with AI ecosystem at the bank, and augment it with analytics. So you're basically creating a data repository. You're creating you are leveraging the AI ecosystem within the bank, and then you are augmenting it with analytics. By creating this 360-degree view of the customer, which is beyond the data that is available at the bank, Emergent P3 is able to facilitate the banks to recommend the right products at the right time to the right customer. We've had enough calls from banks recommending us products which we probably do not need at that point in time, right? So this engine just drives into that particular requirement that the banks have. And when you do the right product at the right time to the right customer, you are increasing the propensity of the customer to buy. And we all know that if a customer has multiple products with the bank, he has an inertia to stay with the bank. He doesn't leave you, right? So this is where this particular solution drives. And of course, this is AI in action. There are multiple such use cases that we can bring to bear, but of course, in the interest of time, let's move forward and probably look at the impact that AI is today having. And we did have the polling question, so it's interesting that this slide is here. So I think it's a very educated audience. They're talking about AI today. Front office, of course, has been leading the way for highest adoption, right? Rates on AI. Chatbots are everywhere. Nikhil spoke about it, right? From client onboarding to client servicing. For an enhanced customer experience, chatbots are everywhere. Back office has been exploring AI as a synergy with RPA, right? To expand their maker to checker automation, moving the needle further on cost savings. Okay? That's another area. Middle office, with its data collection and data processing requirements, has by far maybe one of the highest potentials that can really bring the maximum return of investment for the bank. And that's also probably an area which is sometimes overlooked, because on one end of the spectrum, you're trying to service the customer. On the other end of the spectrum, you're trying to service your armies of people in the back office. And somewhere that decision maker in the middle office is left with his own faculties to decide and maneuver around, right? So probably that is something that can really, the banks can focus and really get a buck for their money, right? Again, the important thing to look here is that to look at enterprise holistically across these three cohorts to feel the real impact of AI, which is the important thing, right? So whether it is front office, middle office, back office, unless and until you build a strategy which covers all three cohorts and is able to provide benefits across the enterprise, you can really not seize the opportunity, the impact that AI can have on your enterprise. And if we could move to the next slide, Nikhil. And this is my last slide. We need to talk about the challenge of adoption, because we all know about the challenges that exist in adoption. Adoption is there, but adoption is slow. And we all know that culture does eat strategy for breakfast, doesn't it? Right? So while technology is taking huge strides, riding on interest and investments, I was talking to Brian before the webinar started, and we were talking about the investments that VCs have been making in this area. Banks would need to look beyond traditional business models. And this is also something that we discussed, that this is disrupting the business model as we know it today, right? And we need to be open to really look at that in a different way. Also look at the siloed data LOBs, right? All lines of business have their own siloed data. What is your single source of truth to drive AI is also very important if you want to benefit from this wave of change. The disruption is here. It's now. And one cannot afford to keep testing waters with one or two POCs here and there. The wholehearted plunge with enterprise-wide transformation programs enabled via AI are your calls to action. Over to you, Nikhil. Thank you.
That's a great message to leave the audience with, Swati. The time is now. And I do think that all the examples that you took, right, they may not come to us very intuitively, because they're probably something that are somewhat transparent to as a user, as a bank user. I don't see them happening in front of my eyes, but I can clearly the impact is seen. And I think that's what really we mean to say when we say that there are a lot of AI applications which are more impactful when it comes to the customer and employee experience. So perfect. Thank you so much for sharing those real life examples. That's what I think made this presentation come alive. Perfect. So let's start off with the Q&A then. I'm going to get the bankers in, Brian and Conrad. let me throw this first question to you. I know we are on the topic of, the whole point about what are the applications that are having the largest impact. And I know, I'm not, by the way, not saying that chatbots and the digital assistants are not important. I think there's still some way for them to really become smarter. But in your opinion, what are the other applications that could have bigger impact than these?
I suppose.
Brian, yes, we can hear you. A slight bit of echo, but go on, please.
So firstly, thank you so much for giving me the opportunity to speak. And Swati, excellent presentation. I'll have to ask you for a copy. So I suppose the first thing that comes to mind for me when I think about AI isn't chatbots. And in fact, chatbots in many cases are covering over problems in an organization that needs to digitally transform. And typically I see a lot of chatbots are less than positive when you deal with them because, of course, as I'll get onto in a second, without the access to the right data at the right time, they can be quite brand negative or quite frictionful for customers. Okay, so when I think about it, what comes to mind to me is personalization and customer personalization. I suppose I like to go back to the past to see potentially what will happen in the future. So if we step back to the pre-internet days and the emergence of segment of one marketing around the kind of mid-late 80s, and then step forward to today's digital customer journeys, personalized customer experience has proven always to provide a competitive advantage, as Swati was mentioning in her presentation. We've seen personalization increase customer loyalty. It drives acquisition, engagement, and retention. I suppose what's a little bit different from those days is now we're in the internet world of cloud, of design patterns, of event-driven data. So we can now actually hyper-personalize, so we can deepen it. I suppose many of you have seen Nike, Starbucks, JP Morgan publicly announced that personalized customer experience is at the very core of their enterprise strategies. It's not on the peripheral anymore. It's not on the front office of the website. It's about personalization to the core. I was reading an article there a few days ago by the Economist Intelligence Unit. And it was quite interesting that when the feedback from about 85% of the executives in banking that they interviewed, they came back and said they're clear strategies for personalization. I suppose so. Let's, as they say, move it on to how. So to mass personalize, you need to employ data science, be it AI, machine learning, or advanced analytics, because that allows you harvest or get insights and use these insights to customize the customer journey to the individual, to that segment of one, to that individual. Of course, it's easy to say, but the biggest problem, and most organizations are challenged with this pre-transformation, AI is fueled by ingesting, analyzing, and deploying data at scale, and most importantly, and in real time. But what we're also seeing is that many organizations have gone even further and connected AI to external APIs. Okay. And they're recognizing that linear banking customer journeys, those traditional banking deposit journeys or payment journeys, are no longer the gold standard because today's customers want a connected experience. So I suppose to think of one: get a loan, help me find the right car, insure my car, and get me a maintenance package. I think we've seen it as well with rideshare, order and pay, and most recently in BNPL. So for me, it's when you put AI together with the data science, the data that's fueling AI, and APIs, we're really, really painting a very exciting future for customer experience with, of course, AI being the brain that brings it together.
Interesting. You almost, what I am imagining is almost when you are doing the customer segmentation, it's, you don't need segments any longer. It's one customer is one segment. I think that's what hyper personalization is all about.
I can give you just one example. When I decided, when a bold middle-aged man got off a plane in Hanoi to build a bank and everyone thought he was crazy, and I probably still am, the jury's out on that one. The first thing I did was I hired a psychologist. I didn't hire anyone else. I hired a psychologist, and the second person I hired was a sociologist. Now, that wasn't a cry for help from me. That was to figure out how I could engage with my customers. And what I did was I got them to go out onto the street in Hanoi and explain to passersby what a segment and a persona was. Persona really kicked it. An imaginary person we give attributes to: earning power, location, and education. And I asked them for the feedback when they came back. And our customers, which are Gen Z unbanked, said they thought we were insane. So if you can't explain something to your customer, if you're telling your customer that you're not an individual, in fact, you're an imaginary person, and we've even got a picture of you, which is a generic picture, it's customer silly. Why was that happening? Segmentation was a reaction to the lack of the ability to churn, process, and personalize data because we didn't have the technology. Now, when we're in almost Alan Turing-esque ability to process and personalize data, segments are offensive. Personas are less offensive. Everyone wants to feel special, guys. So you've got to treat your customers because they're special, because they're the reason you exist. Okay.
Makes sense, Brian. And it's very interesting. The two people you hired first, very interesting. I'm going to get Conrad in. What are your thoughts? What do you think is the most important when it comes to, the AI application related to customer experience?
Yeah, well, let me first return to the subject of chatbots. And I don't particularly like chatbots personally, and I don't particularly like them professionally either. Every time I encounter a chatbot, I'm basically trying to hack it so that I can speak to a real human being. In other words, it's no better than a call center where I can't find the right person to speak to. Brian's kind of touched on this, but I think it's a really important point to make. Chatbots, generally speaking, are papering over the cracks. And in other words, the art is actually trying to stop the reason that the customer feels they have to try and speak to somebody. In other words, get to the root cause. And one of the things that's very fashionable in London for the last 10 years or so is that almost every big bank has got a fintech incubator. So they've hired themselves an expensive WeWork, and they've got some colored bean bags and stuff. And these incubators, these kind of fintech petting zoos, will inevitably end up proposing some kind of conversational AI or chatbot. And actually what happens is when they go and try and sell this solution into the core bit of the bank that allegedly needs this technology, there's a bit of a kind of, are you guys for real? Because everybody knows the reason the customers are reaching out in the first place is they can't self-serve. In other words, fix the root cause, get that bit right. It's the basic stuff that almost every major financial institution gets wrong. The fact that you have two different logins, that you can't see both of your products in the same place. So you have to magically figure out which bit of the bank or insurer you're meant to be speaking to. Is those basics. So let's face it, they would be far better off fixing the basics than I'm trying to come up with an advanced AI to paper over the cracks, which generally speaking tends to underdeliver as well. I don't know of many people that desperately like AI chatbots. Yeah. So maybe the technology will get there, but it doesn't feel like it's there now. So where do I think AI really is already at a level where it can really begin to move the game? I think actually rather than waiting for the customer to reach out to you, kind of touching on something that Brian's already touched on, is basically AI, I think, is a very good capability, or some types of AI, let's say machine learning, are very good capabilities for trying to figure out when to have the right conversation with the right customer or prospect. So let me give a real example where I am at Alaka Bank. One of my responsibilities is marketing. That sits under me. And I like to say to my team, I say, there's about 500,000 businesses in the UK that are our target customers, medium-sized businesses. And I like to say we have 500,000 customers, they just don't know it yet. In other words, I kind of have this thesis that I really want to build a marketing engine where our potential customers hear about Alaka Bank when they need Alaka Bank. When they need financing, for example, and the big bank is, despite what they may claim, is not particularly keen to give them the finance that they need. So that's actually really liberating when you're a new challenger, because suddenly you stop worrying about whether you've got reams of historical data, because clearly we don't. We've been trading for a couple of years now. And you begin to think about the enormous amounts of publicly available data about our target customers. So in the UK, that would be their accounts that they file, their import-export activity, who lends to them, all of this is, and of course, all the information on their websites. So what about if you take those reams of data? What about if you map those against the customers that you do have and try and figure out what was it about the customers that you do have that would have told you that a potential customer, that they were really waiting and looking for something like Alaka Bank? So that kind of, I'm using it to actually, try and talk to the right customers at the right time, which really, really comes back to the theme of personalization that Brian's talking about. I think that's already ready for prime time. And I think that organizations that are doing that kind of thing well are really actually reaping benefits, because when you step back and think about what that means, if you're talking to the right customers or prospects at the right time about your products and services, you'll no longer have a really expensive sales force that's desperately trying to push products on unwilling customers and prospects. You suddenly have appropriate conversations with potential customers and prospects just when they actually need the thing that you have to offer. So it kind of ceases to be a sale, and it more becomes a meeting of valuable provider and customer. It becomes a meeting of minds. And you can take out huge amounts of unnecessary and inefficient sales activity, and of course boost your revenues. So I think, and that's not just about customer acquisition. I use that as an example, but it's just as much about your existing customers and the relevance of products and services as they go through their financial services life cycle. Me as an individual, I may need a personal loan every few years, and indeed I needed one last year. I may need a mortgage every 10 or 20 years. So if you basically use brute force to try and talk to your customers, guess what? It's not going to work very well. But if you get really intelligent and smart about figuring out just the point in time where I might need a mortgage, in other words, I'm just getting to a point where I might need a bigger house or might want to move out of the city, whatever it may be, then you can massively reduce the cost and actually have a much happier customer or prospect base. So for me, that's kind of where prime time is at the moment, alongside risk, which I'm sure we'll talk about in a minute.
Very interesting, Conrad, very interesting. Look, I think, both the banks that you represent, probably the challenger banks or the digital only banks, I think, lucky for you, probably it's not the legacy technology that's keeping you back, but maybe let me turn it over to Swati. Again, across the board, AI, is getting implemented, be it a large bank, an incumbent bank, bank with legacy, bank without legacy, mid-sized, small banks, everyone. So do you see a difference in terms of what kind of applications are getting adopted by different sizes, and maybe what kind of pace is it being adopted at?
Sure, definitely yes. I mean, 80% of the banks that you talk to today, large, medium, or small, recognize the benefits of AI. And almost 75% of them are already making use of the technology in some shape or form, right? The maturity of adoption and application varies. If I could take a couple of examples, like a large bank, global bank, is considering AI to address their KYC remediation woes as an alternate to deploying armies of people towards compliance and avoidance of large fines, right? Or a boutique private bank is experimenting with robo-advisors to manage the portfolios of their Gen Z clients, right? So here you see that, there are different applications across, different sizes of the banks. The one thing to consider though, and maybe Conrad and Brian can talk about it a little also, is that AI presents a much larger opportunity for medium and small banks. And why I say so is because the transformation impact that AI can bring to a business is far greater than the cost incurred on it, right? If we compare it to other kinds of technologies. So in some sense, the cost inertia felt by smaller banks on adoption of technology doesn't really apply to AI, right? So you can experiment, you can fail first, fail fast, learn from it, and then go the way which is the most beneficial for you, is how I look at AI as an opportunity for medium and small banks. While large banks will going to throw big bucks at it, yes, but there's enough opportunity for the medium and small banks to, really look at the transformation here.
Very interesting. You would think that the large banks with the larger bucks would be the ones experimenting the fastest, but clearly it's not just them. It's the it's across the board. That's what I'm hearing. Huh? Interesting. Look, I think it's time for the second polling question. I'm going to bring it up. Okay, so polling question number 2. I'm going to launch that. All right. In my opening and also when Swati spoke, we spoke about how AI started in the front office, but now it's going and getting more important for the middle office. So in your opinion, how is AI impacting the middle office and where is it impacting the most? Is it automation to increase employee productivity? Is it reduction in the number of errors? Is it improved fraud detection or enhanced decision making? Which of these 4, in your opinion, is the most important when it comes to middle office applications? All right, more than half have already responded. We will give it another 10 seconds. Yeah, and again, it's the bottom, the bottom option. I'm going to end the poll now. I think we should have everything by now. Here are the results. It's the bottom option, for the flavor of the season. Enhanced decision making. And I think it's a great segue into my next set of questions. And that's about, in the middle office, how is AI helping improve employee, how is it AI improving, decision making and recommendation? Swati, this question comes to you. Swati, if you're saying, yeah, you're mute.
Yeah. Yes, I have. Okay. So, I mean, let me take an example, and try to create this story, right? Let's look at KYC, right? And let's look at it from a front to back perspective, right? And without really, being biased towards middle office. And let's look at what AI is doing or what potential this AI has, right? Now, again, I know chatbots are not very friendly in this forum, but chatbots are there in front office and they ensure faster client onboarding experience with real-time KYC, right? That's why they are there. So that's how AI is addressing KYC in front office. Now, of course, with the pandemic, there is a need for continuous oversight, right, in terms of KYC. And this can be sorted with AI ML, bringing enhanced decision-making accuracy to the point in the flavor, right, for the polling question that there is enhanced decision making, and this continuous oversight can really drive itself through AI ML, bringing the enhanced decision making accuracy and higher employee productivity in middle office, right? That's how I see AI applying to KYC in middle office. And similarly, AI, ML, and NLP can reduce the checker effort on continuous KYC, thereby reducing the total cost of ownership by almost to 30 to 40% in back office. So in this example, Nikhil, what I'm trying to communicate is that AI is not only speeding up front KYC, it is streamlining subsequent due diligence process, but it is also helping improve it continuously. So you are leveraging AI across the enterprise of the bank to derive benefits in this particular process, is how I look at it.
Perfect. I think, again, a real life examples helps understand it a lot better. And I know you spoke about cost, right? And I'm going to bring Brian in. I know we spoke about it in the meeting before, is about unit economics, right? How is AI changing the unit economics when it comes to servicing customers, and why is it important?
I think we've covered a lot of it. Like, I suppose, just for clarity, unit economics is a measure of the profitability of selling one unit of your product or service. So if I take TNEX, our neobank, in TNEX we define that unit as one customer. Okay, so we look at everything from customer. How much does it cost to do that? And we measure it by looking at a ratio between customer lifetime value, which is how much money we receive from a given customer before that customer churns or stops doing business with us, to customer acquisition, which is the actual cost of attracting a customer. Okay, so that ratio, if we look at both sides of that ratio, personalization drives customer lifetime value, and I think we've mentioned that. You know, make your customers feel special, delight your customers. You know, we've seen the loyalty effect, you know, time after time, and that's about treating your customers as individuals and meeting their needs. So AI allows me to work on that LTV, or the customer lifetime value side of the ratio. On the customer acquisition ratio, and this is a big problem across the world, that particularly in neobanks, and I know Conrad would be very aware of this in the UK with arguably the birth of neobanking in the UK. You know, right now we look at many organizations that spend lots of money acquiring a customer. And as I say, I've also got my marketing team, and I say I can build the biggest bank in the world in about a day. Why? I give $1 million to everyone who joins. And, you know, out of the 98 million people in Vietnam, I'll probably have 250 million customers overnight. Okay, no problem. So being able to do, so we've used, for example, in TNEX, you know, in my segment, the typical cost of acquisition with an emerging country is between $15 to $20. In the UK, if you're the likes of Revolut, it's in the hundreds potentially. We've managed, using AI, we've managed to get that cost of acquisition down to under $3. Okay, why? Because my customers don't earn a lot of money. They are, on average, earn about $3,500 a year. I can't acquire a customer at $200 because I'm never going to make a customer lifetime value. Therefore, I'm going bankrupt, and, you know, I'll be quickly taking a flight out of Hanoi with some angry investors chasing me. Okay, so banks, if they look at the unit economics in that way, and banks don't look at the unit economics that way. They look at traditional economics, and you'll hear of cost income ratios, etc. But cost income ratios hide a lot, and typically cost income ratios are covered by a warm blanket of net interest margin lending. Okay, but what I'm talking about, if you want to engage with your customer, you want to acquire them at the right price. You have to, as Conrad said, you don't fish in the big ocean. You fish where the fish are. Okay, and AI finds you, lets you know where the fish are. And if you want to service them, you know, without having to do cashbacks and ridiculous margin erosion, you know, you need AI to do that from a personalization perspective. So yes, unit economics and even traditional economics, typically measured by CIO or cost income ratio, can be dramatically reduced. Just one point on the traditional measures. You know, we can run the bank, well, industry standard, using cloud, AI, modularity, all of the components. You know, none of it is rocket science anymore. It's no longer a technology game. You know, it's all democratized. We can run our bank because we scale our organization as our customers join, using cloud, using etc. We don't have a CapEx bill, we have an OpEx bill. We can run it on average between 70 to 90% cheaper than a traditional bank. Why? Because we don't talk about RPA. We don't talk about BPM. These are all reactions to having loads of people doing jobs that AI or cloud can better serve. So every time I hear somebody telling me I'm transforming with RPA, I'm going, yeah, and I'm washing my hair with beautiful shampoo. Equally as unbelievable. So what you're looking at is a dramatic change in the fundamentals of how you run a business. Because, you know, if we look at a traditional bank, last estimates, with basic AI, you can replace 35% of the workforce. Okay, so your costs are going down. With cloud, you can reduce your bill dramatically because you only pay as you use. Okay, and then with AI, of course, as well, it allows you to open up new business models. And let's go beyond open banking. Open banking has been an utter complete failure, guys. You know, let's get rid of the theater on that one. But if you look at what's happening in cross verticals, so AI allows you to find these amazing new business models, you know. So in my bank, you can order a pizza. Now, when I explained that to traditional bankers who are my investors, they kind of went, yeah, thank God he hired a psychologist and a sociologist as his first employees, because he obviously needs them. But these new business models are going to come out, and they're going to affect your income. Okay, and then I'm going to bring it up. So AI is a game changer. It's a total game changer, but of course, AI sitting on its own without data. So, you know, the oxygen for AI is data, and the limbs for AI is our APIs. That's the way I look at it.
Awesome. Awesome, Brian. I think, you know, everything that you said, you know, made so much sense. And even as you're saying it, you know, I was calculating the percentages in terms of, you know, what kind of percentage are you saving? And thank God you know, I did not manage to do those percentages in my head, but you mentioned them, 75 to 90% of savings. So it's massive. That's
well,
massive.
I think just one point on that, and like real world, if you know, I've been a CTO, I've been a CDO, I've been a CEO, various roles, but when you're sitting as a traditional banker and you're looking at how much you run on, how much you're spending on maintenance, and Hexaware obviously are part of the solution to that, it's upwards of 60 to 70 to 80% of your total annual budget is just kept to keep the lights on. Okay, so in fact, the amount that's changing, the amount that's transforming is very, very little. So if we look at the traditional pyramid of cost in a bank, it's back office, you know, middle office, and a tiny bit of front office. But if you look at a bank that's AI first, okay, the pyramid's upside down. Okay. Because you don't need, you're actually changing your focus. Your economic model is moving from keeping the lights on,
True,
or attending prayer meetings, which happens a lot in those banks. Trust me, I've been at a few, to generating real value at the front.
Interesting. Yeah, it's, you know, it makes so much sense. All right, so shifting gears, I am going to ask Conrad to comment a little bit about not just, we spoke a lot about customer experience. So let me turn it to Conrad and see, what do you think AI is doing when it comes to employee experience?
Yeah, I mean, I think this is one of the great debates, isn't it? Which is the great debates of our age, which is AI going to be the death of huge swathes of our employment base? And my nuanced answer is sort of. So let me just unpick that. I think we're a very long way away, if ever at all, from AI replacing human beings in sort of knowledge-intensive activities. Yeah. And you know, a couple of times you've referred to Alaka Bank as being a digital bank. I mean, we are digital first. We believe very strongly in digital, but we also believe in human beings as well. So our target customers, medium-sized businesses, they actually want a personal banking relationship. So the kind of thesis behind Alaka Bank is less that we're going to take away human banking. It's more that we're going to make human banking still viable by empowering our human beings, our colleagues, with the very best technology. So there's a number of simple examples. One would be in relationship management. You know, we don't need to make our customers come and visit us on a branch. We don't need branches. We can go and visit the client and we can talk through their cash flow on an iPad, right? Or in credit decisioning, when we're making a substantial credit decision, and we may trust computers, but we probably don't trust computers enough that we don't want the final decision to be made by a human underwriter. But we want that underwriter to have all the information and insight at their fingertips, so they're highly productive. So in that theme, I think you know, AI or whatever variant of AI is about empowering knowledge workers and making them more productive and more effective. In the case of an underwriter, you know, picking up stuff that they might not have seen, or actually qualifying out stuff that otherwise would have wasted their time. There's a whole range of use cases for AI. Where I think AI does begin to replace jobs is the non-jobs. Yeah. And in large finance institutions, largely speaking, there are tens of thousands of people doing non-jobs. Yeah. They're doing processes that don't make any sense anymore. And then, you know, processes that are put in place to, you know, because something went wrong 20 years ago. They're processes that have been offshored without anyone actually wondering whether they should get rid of the process in the first place. There are tens of thousands of people in each global financial institution doing non-jobs. And if I was running one of those financial institutions, walking into their enormous buildings they have as headquarters in London, I would be thinking every day, half the people in here, we don't need them. I just don't know which half. Yeah. So it's the non-jobs that will eventually get replaced by automation, and AI, of course, is a driver of that automation. But I think what we're actually going to see is a smaller number of better jobs in financial services. So in other words, people will be doing worthwhile activities. They will be using their, impossible to replicate knowledge and capabilities. An underwriter has, an underwriter making a lending decision has decades of experience often, and that decades of experience gives them kind of a sniff test that you may train an AI model off that sniff test, but in the end, it's actually very, very hard to replicate. And you don't necessarily want to replace. So I think what we'll see, and this kind of plays to what Brian's talked about, is that we should be seeing, and we should have already seen, a huge reduction in the headcount of major financial institutions. It is an utter failure on their part. They've been unable to execute that. They've had 10 years to digitalize after the global financial crisis, 10 years to move away from branches, 10 years to move away from paper-based processes, physical signatures. All of these technologies are not new. They're very old now, right? They're as old as my career, and my career is pretty old now. So why have they failed to implement these things? It's actually really mediocre and incompetent middle management is actually the problem. And I think it's those middle managers, by the way, who feel threatened by automation because it takes their empire away. Why on earth would you propose something that takes your headcount from 100 down to none? Yeah, it's the kind of empire builders and average and mediocre middle managers are the problem in major finance institutions. I think they should be threatened by AI, but the problem is they're not. There's a kind of a thesis that, that there's an element of turkeys don't vote for Christmas. I think the really senior people in financial institutions are absolutely not threatened by AI. You're not going to replace a chief executive of a bank with AI. I'd love to have that conversation with a regulator. So, the really senior executives in financial institutions, they're not threatened. I think it's a failure to execute, an inability to execute these, big process-heavy, governance-heavy institutions. It's like steering a super tanker, you can make tweaks to the direction of a super tanker, but to transform that super tanker while it's still in motion seems to be an impossibly hard thing to do, which is why the big banks continue to have hundreds of thousands of employees and huge, huge costs.
Conrad, you don't pull your punches. Very clearly, I can see the urgency that that you're talking about. I think the time is now. That's what Swati said, and I think that urgency, that you mentioned, it's very clearly out there. It's time for polling question number 3. I'm going to put that up right away. All right. So what is the biggest challenge that banks are facing when implementing AI at scale? I think those 2 words are most important: at scale. Is it culture, resistance to adopting technology? Is it technology talent, the non-availability or lack of availability of technology talent? Is it the core systems which are not ready? Or is it not just the right proof of concepts? What, according to you, are or is the biggest challenge? Right now, the trend, it's going against the trend of the bottom option. 10 more seconds and we will end the poll. Going 3, 2, 1. All right, very clearly the first and the third, culture, which I think Conrad, you touched upon just now, and also the tech readiness of core systems. Very interesting. I think these, again, we spoke about these in the APIs that Brian said. These are the limbs, making sure that your core systems are ready. Swati, I'm going to bring you in at this point of time. Let's talk about few of the things that we may not have spoken about till now, which is AI ops and DevOps. Again, something that people may have heard, but what exactly are these and how are these helpful when it comes to the back office?
Okay, so DevOps, of course, I mean, I think from a technologist perspective, DevOps is really in the past, right? We talk about service reliability in DevOps, right? That's the main focal point for DevOps. I think what we should today probably discuss, Nikhil, is more AI ops, right? And I'll introduce a model again and probably take another example. So at Hexaware, we approach AI in operations with our own butterfly model. And yes, it's called the butterfly model, which lends bi-directional traceability between business process and transactions to technology applications and infrastructure. Right. So here again, going back to my point that we are bringing business context to technology. And I'll take an example. Let's look at trade finance transaction, right? And I'm just taking a slightly more different example, but just to kind of, again, look at the length and breadth of AI adoption and application, right? Now, trade finance transaction metadata has customer data. It also has counterparty data, right? When you are making an export payment or when you are making an import payment, think of it from that perspective, right? And you will have regular counterparties with whom you interact with that are part of your supplier chain ecosystem, right? So if there is a gap, or if a gap is identified in a regular transaction based on patterns, right, which are being built on the AI and ML, data-driven process repository, which we spoke about a little while earlier, banks have this, can create their own data-driven process repositories. These DDPRs will feed this information into the AI engine. So what are we talking about? We are talking about banks creating data-driven process repositories, which are basically patterns of how transactions are happening across their customers, right? And when a gap is identified, this information is fed into the AI engine to learn, right? So that the next time this happens, a warning will be delivered for such outlier transactions, thereby increasing efficiency. So what the butterfly model does, it provides an early warning indicator. It uses the data available in the ecosystem to predict the next business event so that your operations and technology teams are ready and prepared for potential roadblocks. We are not just talking about application is down and you cannot access the server. No, we are talking about the next potential business event. And then the business will realize the importance of that event and then plan and prepare. The outcome is that the bank's operations start getting benchmarked based on experience level agreements rather than your standard business level or service level agreements. And that's the value that AI can bring to operations.
Interesting. I do want to make sure that we have just a few minutes left, but I do want to make sure that we do cover regulations, which is a big thing. And one person, maybe I'm going to turn to Brian. Brian, we have a couple of minutes. What would you say about regulations? Are you fearful about them? You are on mute if you're speaking. Brian, you're on mute if you're speaking. Yeah.
Okay. I'm not fearful about regulation. And in fact, we've all learned from 07, 08 what happens when you have the wrong regulation in place or the wrong people in charge of the regulators. So regulation is important, and I welcome regulation because regulation, in fact, is protecting the public. Okay, and that's what it's trying to do. You referred to me as a banker. I'm no longer a banker. I'm okay now. I left banking a long time ago and went into the neo world. So when I look at regulation, I've been watching this very closely, particularly because we use a lot of AI. I think, yes, regulations will change how AI will be used, okay, particularly as we move more and more towards organizations deploying AI-first business models, okay? So, AI first, not human first, or not a balance. Because AI goes beyond the usage of the technology. It comes down to the decisions that it makes, okay? Not just about data, it's about those decisions. And when we looked across, like in 2021, I think across the world, we all saw the governing bodies, particularly in the UK, the EU, and China, putting together papers and indicative committees that were looking at how industry should monitor, number one, their algorithms, best practices for auditing, and most importantly, frameworks for the more transparent AI systems, okay, to make them more transparent. I think right now, Europe seems to be leading in the AI reg space, or the robo-ethics, as it's now being called. And I think we saw in April 2021, and I actually read the report, it was interesting, the European Commission is proposing what would be considered, I suppose, a landmark law to govern artificial intelligence, and that's the AI Act. And when you look at that act, and because I think this will start to create the ripples across the world, the US is a bit of a laggard on this, but I think this act will start a little bit of a ripple, and it's intended to protect actually the fundamental rights of customers or people when AI systems are used, and it will be the world's first piece of legislation in this. So I suppose what it's really, when you distill the report down, or you distill this whole conversation down around ethics, you know, what they're trying to stop is, or trying to mitigate, are privacy and surveillance issues. I suppose bias and discrimination. We've seen the convoluted neural networks, you know, making incorrect decisions in law enforcement in the US. We saw in 2020, I think off the top of my head, when Amazon Recognition, which is their convoluted neural network for image matching and identification, they removed it from usage by law enforcement because it was bias. And also what Conrad was talking about was the role of human judgment. And that is the biggest philosophical thing that we're going to have to discuss over the as we adopt more and more, or we default to machines to do tasks, be they robotic and mundane or procedural, or be they higher up, even going as far as creativity and even music, who knows. So very soon EU citizens will be protected, you know, from the use of AI for mass surveillance by law enforcement, which is really important. And also I saw some quite interesting bits in there. The AI in recruitment and credit score evaluation, as well as border control, will be classified as high risk, basically because of discrimination concerns.
Right.
And also what's finally I found quite interesting and quite scary, for those of you who follow some of what happens in China, they'll also ban governments from using AI to socially score people, okay, which is dangerous. So yes, it is going to change. It needs to change, because a hatchet can be used to chop down a tree, or it's something more nefarious. It's a tool, and we do need to set we need to set the rules of engagement, because unfortunately, if we leave banks, or we leave this to float, there will definitely be instances, and that go further than kind of offensive chatbots. We will see incidences of injustice, discrimination, if it's not controlled quickly.
Wow, I think regulations are definitely here to stay and required, as you rightly put it, Brian. And I think whatever said and done, we are getting or stepping into a future which is going to be completely different from what we have today. And while I love this discussion, I would love to continue maybe for 1 more hour maybe, but for today we are completely out of time for today's webinar. Let me thank my panel for being so generous with their insights. I think it was just spurred a lot of questions. They are still bubbling in my head, but thank you so much, and thank you, audience. I hope you were able to take back something that maybe you did not know before, and thank you so much, and have a wonderful day ahead.